We have our next topic is going to be challenges of startups and investors from emerging markets facing international competition. Along with those we're going to welcome to the stage, and we want to give a huge Startup Istanbul welcome, stand, cheer, do everything you can to Salman from Aramco Entrepreneurship Ventures and Magnus, who we've seen from N Front. Welcome them, please. You, sir. Good to see you again. You too.
Okie doke. Now I'm charged up. All good. Welcome, gentlemen. Good to see you here. I think what qualifies me to be on this panel is I lived in Saudi. I lived in markets you're interested. And I'm kind of, I poke people and get answers that a lot of startups would feel like they need the answers to. In the half hour that we have, I want to kind of dive into your global experience, because this is more like the region's most global hub for startups. We have over 65 countries that applied, and at least 20, 25 founders from other countries are represented here. So you guys are looking into global deals, not together yet, or have, yeah, see? This is important. That's kind of, that eye connection is really important. So what are your primary concerns going in the world today? Where are the areas that you feel there's going to be more improvements, there's going to be more opportunities, and where are the areas that you see being saturated and not becoming, at least fading away from your area of interests? You can take whichever turn you want.
Thanks, Ozan. Again, it's a pleasure to be up here on stage. It's a good question. I usually try to not tell entrepreneurs that this is a happening space or this is a sector that's really booming. I think you have to really be in tune with the market that you're in or about to enter into to sort of look at that and see whether the pain point that you're trying to solve is something that can be solved, and if that market can sort of accept that. And the solution that you bring to the table is something that's applicable there. Follow your passion, right? If you're, whatever sector you're in or the story that you bring in, and we're looking at constantly with founders whether they can connect to the problem that they're solving and the teams that they've built around them. One of the things that we have in Saudi and in the MENA region is we're constantly trying to tell people that there's a difference between growth and scale up, right? So when I say growth, it's about spending more money to make more money, right? You build something out wherever in whichever market, and you're trying to replicate that model in a different market. With scale-ups, you're trying to increase that top line, increase the revenue, but also do that with very less significant sort of resources and less significant cost. And so whenever you're entering a different market, whichever sector that may be, you need to look at that and look at the nuances with that market and see whether that can help address that.
I guess I try to not box my mind into, kind of a little bit like you said, in that certain sectors are good and others are not. I think to be a good early stage investor, you have to be able to think outside the box a little bit and really, see things. And it's a big part of it is luck, but see things that maybe other people haven't explored. So I find that if I box myself too much into what other people think or what I, kind of prejudge a little bit, then, and that goes actually on all parts of my life. I really try to do that less, and I work on that. So I think that goes back to the investments as well. I do kind of see things though that I think, maybe it was funny to hear what some people were talking about the entrepreneurial ecosystem here in Turkey is similar to Norway and other smaller hubs, which is actually this thing about kind of thinking globally and thinking big enough from day one. And it was interesting to hear that because it's exactly the same thing I say in Norway. I mean, it's identical. So it's like, I was talking about this thing for VC funds, how important it was with the growth aspect and so on. That's exactly what this is about. You have to kind of bring that mindset to the investors that you're talking to. I mean, we have found or built something that's really differentiated and making a difference in this market. And hey, maybe it's a saturated market. I just invested in a company that's a C2C marketplace for secondhand apparel. That's like super competitive. Right. I wouldn't normally touch that, right? If the first time I heard that guy speaking, I was like, oh, whoa, I don't want to look at this at all. But in fact, he has invented a new way of doing consumer-to-consumer logistics, completely changing that whole game. That's why he has so good growth. So if I had just like locked my mind to, I'm not doing C2C marketplaces, I wouldn't have done that deal. But I really think I found something cool there. And so, yeah, to answer your question.
What's the name of the company?
Huh?
What's the name of that company?
Sada is the name. It's a Finnish company. Yeah. They're in 3 geographies now, so they're raising capital, 4 million, to expand to some new geographies in Europe.
So I wanted to poke it because if you search what companies they invested, it's kind of, you can't find it anywhere. Not in many places. Yeah, it's a secret that we all share now. So again, I appreciate the fact that you're kind of trying to look very broadly and not limit your options. But you must be believing some things that other VCs are not believing to be a differentiator factor in your own business. Because if everybody is looking into everything, everybody has the same mindset, everybody has the same worldview, you will be eating each other alive. But like, sometimes you just need to have a little bit unorthodox and contradict what everybody else is thinking, and maybe you'll be right, but maybe you'll be wrong. Like, how do you differentiate yourselves if you're all looking into the same things with the same lens?
I mean, I think that at least for us, it's and this I see is generally true in Europe, in particular, where kind of I built my VC background in London, is that the different funds focus on quite specific niches. This is what I was talking about before around the sector, geography, and stage. People are relatively focused, and this is a really good thing for the companies, because that means, and this was mentioned by other people today, that you can find an investor that really adds value above and beyond the capital, and they should do that. So, and you will see they try to pitch that because there's so much competition today among funds, right?
30 funds just beginning in London.
So, yeah, exactly.
Yeah, same area. So you guys are.
So there is competition, but it's not like it is in mid-cap, large-cap PE or in other sectors where we're kind of knifing for it. Right. It's a really good ecosystem, especially I can only speak for Northern Europe, but it's just, and a little bit, Spain as well, where I've been operating a little bit. It's just that we're really more collaborating on deal flow. And the fact that we're niche focused on different things means that often the right deals end up with the right investors, which is a fantastic thing for everyone, right? So yes, we are quite niche focused. And I'm better at deeper technology. I'm better at B2B since I'm a computer scientist, and I know that space and I've been doing it. So yeah, what kicked me into gear on this B2C deal was that it had that deep logistics angle.
And probably it also helps when a startup is pitching to another investor. They might say, well, you're not really okay with us in terms of size or market, but hey, I know this guy who's kind of looking into the same deal. So you can start collaborating,
that happens.
Which was not happening in the Middle East for a very long time. So it's the cultural difference as well, that I lived in Saudi. It's a complete different place for a Turk. I lived in Silicon Valley. It's a complete different place for a Turk. And I start seeing like these co-investing or leading, or those are different mindsets. Like in Aramco, how do you differentiate? You're looking into global deals, which means you could be working with anybody globally in a VC learn, but it's a different culture also, not just from the startup perspective, also from the VC perspective. How do you kind of balance that? Or do you ever consider like, let's not try to go do this, let's work with this?
So Aramco set us up, Aramco set up these 2 funds, venture capital funds, and it's very mandate driven, right? So the first fund I was with Aramco, it's a typical corporate VC, strategic in that sense. $500 million energy, oil and gas, upstream, downstream.
Energy Ventures.
That's right, the Energy Ventures Fund. And so that was very focused on getting global technologies, finding the best and brightest everywhere.
Yeah.
And then adopting that and bringing that technology home, and helping that with operational, because the strategic value, the strategic impact that you'd get from a 0.5% operational gain far outweighs the fund and the investment.
Aramco
Right?
is the world's largest company, and you
That's,
know what it is.
that's right. And this now the other fund that I'm with now for the past 2 years, it's more of an entrepreneurship fund, and again, it's very mandate driven. I've tried to define the impact definition of it that my colleague at the previous panel was referring to. It hasn't been easy, but it's a fund for economic development and diversification. Packed words. What we're looking at. Trying to have job creation, workforce development, better healthcare, better lifestyle.
Increasing livelihoods.
Exactly, lives and livelihoods, technology, sort of adoption. The way, and I think largely that's also driven by Saudi and MENA as a demographic, right? Very young population, very digital savvy, online sort of subscription penetration, mobile penetration. And so I guess you can relate that to the sectors and some of the convergence that we're seeing, that a lot of the sector focus is driving that. So it depends on the market that you're in.
And you prefer to lead the investments most of the time, and not necessarily much like, it's not like one is better than the other, but why does it make you really focus on leading the investments and kind of helping them move a little bit more faster? Does that make a difference in the startup's life because you're probably the only investor? How does that work in later stages?
Right. So we've of the 25 investments we've made, 1 or 2 have been co-investment. We've led all the other investments. I think part of it has been circumstance. In the initial years of the fund, it wasn't savvy to be investing, and it wasn't really, the ecosystem was still sort of growing. And
you waited for me to leave Saudi starts investing.
We waited. We timed it very carefully.
Yeah, the 25 companies all to me.
We've invested with Kaust as well, and so that's another thing, right? So we've seen universities now developing proprietary technologies, right? And so students and faculty, and with King Abdullah University, we announced a deal last week, and we've done one a couple of years ago as well. And so, we can see ourselves driving the deal, but at the same time, I think we're probably the only ones in Saudi, probably the region, which has this very sort of mandate of supporting the kingdom's ecosystem and driving the value creation there.
So just to add to this, and it might differ from your reasons, but generally why the larger funds prefer to lead the rounds. And it's true for most of the bigger funds. Even in London and Berlin, most of the funds, my previous fund, we always led or took the whole ticket ourselves. Why is that? Well, it's because the few investments that they make, they want to make sure that when they go well, they have a big enough impact on the portfolio so it can potentially return the whole fund and more. So it's pure fund mathematics that makes it so, which is why for angel investors or people investing directly, or people like us focused on smaller checks together with the large VCs, we don't care about that because we're going deal by deal. Next year, I can exit 2 of my investments if I like in the Series B deal, or partially exit out of that. But if I had a 10-year fund structure that I had to return, and by the way, it takes on average now 14 years before a seed fund actually returns. So I was sitting at dinner, I had a VC dinner in Norway as part of a big international conference that's held in Norway every year, and I was talking to the guy sitting next to me. He's an investment manager at a large fund in Sweden and Finland, and I was like, "Yeah, it must be cool. Your first fund, when was it raised? 14 years ago," he said, and I was like, "Wow, how was the return on that fund?" We actually have 2 companies left in there, and I was like, "These guys started that fund, that many years ago, and they still haven't seen carry from their first fund." So it's tough to be in VC these days. It's even harder to exit. But that's why they take the big lead checks, because when they make a good investment and it returns, they want to have a big impact on the fund.
So going to the fund returns in a way, you're putting a lot of faith in entrepreneurs, and your game is to kind of help them go forward, and then for an investment return. All the startups think VCs are rich. They get a lot of money, they have this $100 million, just to enlighten the crowd. Corporate VCs are completely different, of course, but how does the fund's managers make money? Like,
want
do
to
you
take
have
Well, so I
5
was gonna
yachts, you have 3 Lamborghinis.
Right. No. So I was going to say we don't get carry, right? So we're corporate VC. We're structured very differently. It's a unique sort of thing, and we're not getting the typical sort of carry that comes with it. Part of the return, so there's a financial return and a strategic return. With us, I think the long-term incentive, both with the energy fund, but more so the entrepreneurship fund, it's that impact that you're seeing. Right, you guys would have heard about the PayPal mafia, right?
Yeah.
All these founders that had started PayPal went off and then created amazing companies, and so part of our role is to help create that in Saudi, right? So being able to invest in these startups and then having these founders go off and mushroom and sort of cross-pollinate that.
Yeah. Now we have a Kareem mafia. I think one of the ex-Kareem senior executives are building a startup that he was pitching. I hope he was in top 10.
Right.
So it will create an economic incentive, and that's part of the corporate VCs, how they look into things.
But this is actually an important question, and it's something you take for granted when you work in VC, that people understand how they make money, but actually most of the time people don't. So just to answer your question about like kind of how, there's two fees that VCs make money on. The first is the management fee. This is a typical VC structure. It's normally 10 years long, 5-year investment period, 5-year divestment period. So the first 5 years they invest, the last 5 years they try to divest and exit the investments. So the 5% management fee, 2% management fee. I wish it was 5. This is
Tell me where you can get 5%.
Wishful thinking.
Yeah, wishful thinking.
But if it was, the 2%, it goes off of the total amount of money that you raised and that you manage. So here I'm going to put a little bit of a dark kind of picture of how difficult this is. Yeah. We spent a year fundraising before I went for this deal-by-deal structure, right? And we raised 34 million euros for a first-time fund that we built. And 34 million sounds great for a first-time fund. There's smaller first-time funds, so I don't mean to like step on that. But if you calculate a 2% management fee on a 34 million fund per year, and you have a few general partners, some venture partners, a couple of offices, it's very little that's left for any salaries, and you're stuck with it for 10 years. Now, of course, you're probably going to raise a second fund and you stack it, but still, you have to raise a significant amount of money. So that's why I actually went back to those investors and said, hey guys, really appreciate the ticket. I have amazing deal flow and good connections. I'm going to go deal by deal until I can raise 80, 100 million plus, and then maybe I will, if it's better. Yeah. I still actually believe my current model is quite good, so I might stick to it, but maybe I will go if I can raise more and do that. So it's an important takeaway. The other part, of the fee is the carry that comes at the end, which is why I was saying this about the 10-year fund. When all the portfolio companies are exited, the carry comes at the end, but you have to exit all the companies. So at the end of this period, the fund will try to rush to get out, if not all the investments are out, to get out the rest, and there are drag clauses in there that could hurt the other owners like yourself. So just keep that in mind.
Exactly. So why I wanted to bring this up is, I see a lot of founders pitch and ask VC money. It's completely different than angel money, without actually understanding the VCs you want the money from will have to sell your company out, will need to ask you kindly, or guide you friendly, but eventually they have the rights, they will have the rights if you go Series A, Series B, Series C, to drag you to sell your company, because that's what their business model is. Unless they sell your company, they don't get their money back. And they can't pay their money back to their people, give them the money, and they can't individually as partners and general partners or limited partners, they're not going to get anything out of it.
Just to be clear on that, the only thing that a normal VC cares about, like the only goal it has, is to maximize its return back to the LPs. Yep. So that's why it's so important. Unless it's like, single LP, some kind of other strategic goals or governmentally backed where there's sustainability
corporate
goals.
VCs are different,
But generally, that's what they care about. So if they have to, they will force through a sale, and you might be pulled down with it.
And as an entrepreneur, you need to understand, like you said, you need to do that research into that investor that you're raising, right? Maybe a financial VC is good for you, maybe it's not, maybe it's a strategic.
Exactly.
If you see them acquiring your your startup years down the line, maybe that's the way. With us, sometimes we give them access to, if you want to pilot the deal, whether it's Aramco or whether it's in the kingdom, to make the access for that. That could be another motive.
So another critical difference that as you, the founders, should really understand and internalize is there's a strategic difference between VCs and corporate VCs. Corporate VCs do not have usually a fund term that they'll force you or they'll guide you towards exit. So they could be evergreen funds. They would like it, but they don't have a mandate to give back to. And VCs do. So, and why should you approach the VCs? Why should you approach the corporate VCs are two different issues. The fact that these guys are investing, their money might look the same, but the consequences of that money are completely different. And with angels also, it's very, very, very different. And with that, I kind of want to go back to, because my bread and butter is like very early stage, even earlier than you. I run accelerators all over the world. Currently, I'm building we built the first version of an impact accelerator fund for UNDP, Minister of Foreign Affairs, Bill Meldayas Foundation, and Eczacıbaşı and Limak Holding. So it's a different model to create economic impact or social impact around sustainable development goals. Again, kind of the segue to previous discussions, how important to you to kind of figure out ways to do positive social impact and mandate those with your founders? Of course, profit comes first, there's no question about it. But are you okay in investing to arms or defense industry? Are you okay in investing in some sectors, but not definitely okay investing in other sectors? I think that's a good question, kind of from the Aramco side as well.
Yeah. So we've been largely sector neutral, and to an extent stage neutral as well, tech or tech-enabled sort of investments. When we're looking at any investment, obviously it has to make money. It has to make returns, right? There's no long-term sustainability if you don't have that, right? So that's definitely key. The impact that we're looking at, and like I said, right, we're measuring impact in very different ways. We've invested in AI and supercomputing. We've invested in healthcare and agriculture.
Drone company.
Drone company, that's right, in Kaust. So again, different ways to measure different impact. We've even invested in a fitness sort of app aggregator, and so on, healthy lifestyles and that. It's hard to measure, and we're trying to work with our startups to try to see what metrics that is, right? So, we've recently made an investment into a computer vision startup that can detect your dangerous driving behavior if you're wearing a seatbelt or not, and we're trying to see, how are we impacting lives, right? We're saving lives, we're saving assets, saving economic damage in that sense. So that's sort of part and parcel of that. I don't know if you want to...
Yeah, well, I was just going to say, I think you have to kind of, guys, differentiate a little bit between so there are funds that are impact funds. I mean, their job is to make impact investments. They have clear investment criteria where that is part of their evaluation. So that's very different from funds that are not impact funds, but maybe care about it for whatever reason, So like myself, for instance, so we're not impact-driven directly in our mandate. However, as people, there are kind of things that I would stay clear of, clearly. So for the funds that are not directly impact-driven, it's more about the personality and the preference of the investment committee and like the team that looks at the deals, really. But what's interesting, when you raise capital these days, I spent, about a year and a half fundraising, and so many of the LPs now are like, hey, are you a minority fund? Do you have some kind of impact angle?
Yeah.
And I think 80% of the LPs I spoke to had those kind of questions, which I thought was interesting. So we tried to come up with all these reasons for how we were a minority fund. So we were in this planning session, and we sat in the room and looked at the general partners and went well, I'm from Norway. We have one African American, we have one Jewish American, and then we kind of tried to pitch the angle that we were a minority fund, and we all looked at it. So I was like, no,
You're
this.
too white for that.
Yeah, we just really wanted to make it work. But this is true. A lot of them are looking for that these days. So.
And one angle I'm going through it is most of that, now I think the world is going through, like, doing good is also doing good business. Maybe from the LP side, it becomes a mandate, or definitely from the consumer side, it's become a mandate. So whether you want it or not, I think as VCs, and not you guys specifically, the consumers will start driving good companies forward, and then you'll start seeing good company returns becoming better than average company returns, and even LPs will start demanding that kind of good angle, at least not harming angle, like being a neutral on social issues and everything else. And looking into that lens from the minority perspective as well, how do you see the rest of the world, apart from a very developed, at least what other people see as a very rich country like Saudi, or like Nordic that has social infrastructure that's already been appraised of. How do you see the rest of the world in terms of opportunities where the startups that you're looking to invest are actually driving their economies forward, or because now there's big opportunities in their side of the world as yours are like becoming more saturated. Do you kind of fly more outside of the developed countries to see deals? Or is that kind of, well, we have enough opportunities in this part of the world, let's finish this first and then go forward?
I think you have to strike a balance, right? You do have to get out of your, so we do try to go out. We've got a very small team, so it's just trying to do more with less. And it also helps, forums such as these, just looking at how other startups are solving the same problem perhaps, or a slightly different problem in different markets. Right, so no, we definitely try to reach out. The last 2-3 years, the pace of investment activity, venture capital in Saudi and in the MENA region and Dubai, it's been immense, right? Kareem, like you said, put up a good spotlight. Amazon's acquisition of Souk. So these sorts of things have really put a spotlight, and you have talent converging. You have a lot of students who've been sent on, say, government scholarships abroad, come back and looking to give back to the country, and we're trying to invest in that, and so that cross-pollination of talent is great. Working with universities, working with accelerators, incubators, angel investors all across the stage. And so definitely, as investors, we always try to network and reach out and try to get the best deals. Again, impact-driven and sort of value-driven in that sense.
I think one thing that I've at least seen working from kind of London initially, trying to look at deals in the Nordics, and then what I'm doing now looking out, it's really hard to invest in startups that are so early stage unless you have boots on the ground in the geography that you're investing in. It's very tough, because even as a Norwegian who lived 12 years abroad wanting to invest in Norway, it was impossible to go that early because I didn't see the deal flow early enough, and I wasn't there to really help the company in its early phases. So I think that's a real challenge, and that's why actually a lot of the larger funds prefer to have partners like us or others in geographies where they can say, hey, we have a local guy that really knows this space and we can co-invest with them. So that's a huge one, I think, when it comes to, and the other thing about geographically spreading yourself out is that I think it's also important to stick to markets that you really know the culture of. So for me to go to China and try to invest there, I think could potentially be disastrous unless I teamed up with someone locally, because I just don't understand exactly how the culture works.
Your stomach will be having issues to start.
Yeah, like the language barriers, it would just be a challenge, right? Yeah. So sticking to Europe and the US and parts of, I guess, English-speaking, Middle East, even if I have connections there, makes more sense. And that's more or less my answer.
Definitely. Proximity is key for that.
And even, this is, I think, one of the things that will not be able to put an AI behind. Everything will be artificial intelligence related. You can have Zooms and Skypes and Hangouts, but having that personal touch is always critical. So last 2 minutes, I'm going to repeat the same question I asked to Fit and Jem. Which portfolio company do you want to give a shout out to? I know it's like picking which of your children do you like the most? It kind of might hurt the others. But like, what's the one company that you want to do a shout
I'll
out?
give you two, and both recent investments. So one particularly because we're in Istanbul. So we invested in Unidex recently with Kaust, and it was one of the finalists in Startup Istanbul this time last year. So I guess it basically goes to show that these forums really help, and these sorts of efforts really help.
That's one company I thought I wish I had the money to invest in, but like supercomputing, they need super money, so it's good.
Right. And another one, Hazen, it's as I mentioned, is a computer vision AI-based thing. Both these startups have come out of proprietary technologies from research from universities in Saudi. And so that's really what we're trying to put acceleration on to helping the universities commercialize that.
So I actually have two portfolio companies raising more money now. So it's relevant for the investors that are in the audience. The first one is Sada that we spoke about. Normally just, you would say a second-hand marketplace is for apparel is a tough space. This company has grown incredibly fast in the past, has really good margins, really good unit economics, but more than anything has really differentiated its way of completely solving how consumer-to-consumer shipping is done in a cheaper and much more streamlined fashion than anywhere else with a proprietary API. We started the fundraising about 3 weeks ago. They already have 3 million euros committed in term sheets, so we went really fast, a lot of strong interest from leading VCs. We're missing 1 million euros that we're probably going to close within a couple of weeks, 2, 3, 4 weeks maybe even. So if anyone else is interested in this B2C space and something really fast growing, then that one is interesting. The other company that's fundraising now in our portfolio is a cybersecurity business from London. It's doing kind of breach detection, figuring out if you had a leak, which most companies will have at some point. In fact, it's much more common than you think. They will immediately discover this breach and let you know, and so you can react appropriately. In fact, it takes over half a year before any companies discover their leaks when there has been any breach. So it's really long times. And now the GDPR has come in and given big fines to people like British Airways and other companies that have experienced leaks. So it's in the hundreds upon hundreds of millions of dollars in fines that are exploding now. So they're seeing a lot of demand growing at about 250 to 300% per year in revenues. Both these companies are about $100 million in ARR, growing really fast. So that company is a little further behind, just started raising. It's raising £4.5 million. So yeah, if there's any other investors, there's some lead investors in there currently looking right now from London and Berlin. That's it.
Perfect. Thank you so much. Thank you all for sharing these kind of quick insights. And Bill's on stage as kicking us out. But one last thing, like for the founders out there, focus on your business, understand what the VCs and corporate VCs do, and make your homework, and then you'll progress much faster. Thank you so much for joining me, and thank you for being a part of Startup Istanbul.